Welcome back to Paramount Financial. This is John.
This is Frank.
And today we're going to talk about taxes.
Yes, my question to you is that when does tax season start?
Yes, people have the misconception that as soon as the year ends, we can go do our taxes right away. But in actuality, the IRS gives businesses time to get all their tax documents together and send it to you by the end of January so that you can start filing your taxes. And that official date is January 24th, 2024, that you can start filing taxes for 2023.
Okay, what are something we need to prepare for as tax filers?
Yes, that's a great question, Frank. As individual tax filers, meaning that you don't have a business, you just have a job. One of the main things you're going to get is either a W-2 or a 1099. If you own a home, you're going to get a 1098-T. If you go to school, you're going to get another 1098 form from your school. So just keep track of all these documents where you are receiving from, because all these documents are going to be crucial for you to put together your proper taxes so that you can maximize on whatever refunds, credits, and deductions that you may have. Just make it simple. Whoever you make money from, you're going to get a form. Wherever you put your money at and you make money, you're going to get a form. If you moved money from one place to another, you may get a form, right? If you paid taxes of some sort, like for your home, you're going to get a form, right? So just keep an eye on those things. Also, if you have children, make sure if they're young children and you are taking care of them, or you send them to a caretaker or babysitting of some sort, keep track of all those expenses. Keep track of all your healthcare expenses as well. Those are some of the things that you can prepare for as an individual tax filer.
Okay, sounds good. Now, what happens if I'm, for example, I'm self-employed or I'm a business owner, I have my own business. What kind of documents I need to prepare for?
Yes, another great question, because nowadays, having one income is just not enough, right, Frank? A lot of people may pick up a side gig, side business, like people working a main job and then now they're a real estate agent or a life insurance agent on the side like ourselves. Or maybe you just run your own business. You have to start preparing for your business taxes as well, right? And that includes making sure that you get all the 1099s. So whoever you're making money from, they should issue you a 1099. And on top of that, if you received any Zelles or any electronic payments that maybe you didn't get the 1099, if it's over $600, you have to make sure you self-report that, right? Because if they audit you for some reason and they see money going in your bank account and it doesn't match up with your 1099s, you're responsible for those dollars as well. So keep track of all the money coming in, and then now you have to keep track of your deductions. Deductions mean all your expenses that are related to your business. Utilities, common expenses like cell phone bill, you drive a car, whatever common expenses that you have to operate your business or do your business, make sure that you keep track of all those expenses either on an Excel sheet, or if you have a specific credit card that you're using to keep track of all those expenses, your credit card should have an end year statement that breaks down all the expenses for you, so you don't have to do all that work, right? Go through all your statements. If you're a business, most of the time businesses may have like a bookkeeper or an accountant that will do their profit loss in their balance sheet. So make sure you have that ready for your tax person, because depending on how your business is set up, you may have to file your tax by the middle of March or as late as April 15.
Now, besides the expenses which you can write off to lower your income, another thing that I love to helping my clients is tax credits. What kind of credits people need to look out for to save more money on the taxes for next year?
Yes, Frank. Everybody loves credits, right? Because credits means less taxes paid or maybe bigger refunds. Right? Now, there are some credits that are just credits where they don't refund you, but they help lower the tax for you. And then there are refundable credits where, if you don't have any taxes to pay, they're still going to give it back to you, right? So just differentiate between the two. But just in a nutshell, there are some main places that people can get credits from. The first one, Frank, is people who have children. Right?
Obviously.
Unfortunately, you don't have children yet, Frank.
Not yet.
I only have one. But people with children do have a tax credit. In the past, the tax credit went as high as $3,600. But right now, it's the flat $2,000 for each child. And if you qualify, Depending on the child and the income that you have, you may qualify for an additional $1,600 for that child. So anywhere between $200 to $3,600. But if say you're a high income earner, the likelihood you're going to be in that $2,000 range per child. Okay. And that's under 18 years old.
Okay.
Once they're over 18, they're in college or they're going to school, then you have a different type of credit. That credit is for education.
Okay.
Right? So if you yourself are going to school and you have that 1098 form from the school showing that you paid some tuition fees and you paid books and fees from the school, then you can get the American Opportunity Credit that can credit you back some of your taxes or some of the money that you paid for going to school.
Okay.
If your child is going to school, then you can continue claiming them until they're 25 years old and be able to claim that American Opportunity Credit on your taxes. So even though you don't get that $2,000 anymore for being under 18, but if they're going to college, you can continue getting the credit. So encourage them to go to school. Another way that people can get credit is that if you're low to medium income with children, families, they call it a earned income credit. In the past, I think this credit capped out at about $67.50, and this year is increased to $74.50.
Nice.
So total, right? So you get that $2,000 per child, and depending on how many people are in your family, if it's 1, 2, it's less, but 3 or more is when you can max out up to that $74.50. So you have a lot of children, you have low income, you're going to qualify for more earned income credit, right? And so that credit's going to go to your credit to help pay for your taxes or help give you a bigger refund.
Okay.
Another one that people can get credit for, Frank, last year you asked me this, is people that save money into IRAs, 401ks. If you're at a certain income level, the IRS is still giving you a saver's credit for contributing to your IRA or to your 401k. So make sure that if you do contribute to that, make sure you let your tax person know so that way you can claim that saver's credit if you qualify for it. Finally, the last type of credit you can get, you buy something like solar or an EV vehicle like your Tesla, Frank, and your solar panels. Solar panels are offering 30% back on whatever you paid for it still. And then if you purchase an EV vehicle, you can get up to $7,500 back for a new one.
Yep.
And then even if you buy a used one, you can get $4,000. So even if you buy a used vehicle, you still qualify for an EV credit. So those are some places where you can find some credits. You know, if you're in the market to buy a new vehicle or you're trying to going solar, there are some incentives for you to do so.
Awesome. Well, thank you, Jonathan. And ladies and gentlemen, this is how you prepare for tax season in a nutshell. If you need help prepare for taxes for next year, give us a call, drop a comment below, and let us know how we can help. And again, this is Frank.
This is John.
Thank you for watching.